JNK, it is the non-BJP parties which are leading, but the picture has changed as far as Haryana is concerned, because there's a clear lead that BJP has in Haryana, close to 49 seats thereabouts. But we have Aditya Sood, the fund manager from Incred Asset Management, joining us on the show to talk to us about what they are making of the market mood right now. Hi Aditya, good to be speaking with you. So what's the strategy right now? Because last couple of months we had seen a few institutional investors increase their cash holdings. Is it a time to start deploying now, or still waiting on the sidelines?
Yeah, I would say that, what has been very unique aspect of this market has been that, virtually, essentially the correction was absent from this market. And now what we have seen is that, and correction is obviously a normal course of a bull market, and this continues to be a buy on dip market. Although, what we have also witnessing is that, this correction has been more focused towards, areas wherein we had lot of excessive valuations, obviously defense, bit of PSUs which had rallied, excessively. Obviously, stocks did well. So I would say that, possibly going forward, there are two elements. One is that there is going to be sector rotation in the market, and this is very, very healthy from a market standpoint. And the second aspect is that, essentially because of earnings growth being, after 25% CAGR for last 4 years, we are getting into a year wherein earnings growth is going to be, in the range, in the vicinity of 10 to 12%. So that means that, whichever sectors have got limited scope for P multiple expansion could take a pause, and we are headed for a consolidation possibly, but this is going to be a buy on dip pocket.
You seem to be bullish, quite bullish when it comes to consumer stock currently, and in the past 3 months we have seen a considerable rise when it comes to the Nifty FMCG index. But could you just tell us when it comes to consumption as a sector, which are those pockets that you're quite bullish, be it the consumer staples, consumer durables, QSR companies, gold companies, which are these pockets which look much more attractive to you?
Sure. So essentially from broadly, if you look at consumption as a basket, we have seen consumer staple, volume growth being very, very tepid, post-COVID, because it is a well recognized fact that the rural India, essentially was the income had not, sort of recovered to a pre-COVID level, and essentially what we saw was that urban incomes have, done reasonably well. In fact, they are like 40% higher than the pre-COVID level. So we were betting heavily on companies, wherein we believed that they should be benefiting out of the rebound in rural consumption. So we like categories wherein, it is a combination of staple companies, be it Dabur, HUL, the market leaders in staples. Anybody who has invested, heavily into go-to-market in rural, is what we are betting on heavily. Secondly, on the consumer durable side, we had many companies, wherein they had seen a P multiple contraction, and this is all thanks to COVID leading to some sort of volume recovery, and then those volumes have sort of disappointed, and now we are seeing essentially a lot of areas wherein, for example, air conditioners being an area wherein we had a really very hot summer. Potentially, we have not seen this kind of a summer in last 40 odd years, and we saw a stock out type situation happening. QSR is a very, very interesting space from a cyclical standpoint. We think so there is a lot of value in QSR companies today. And the very simple framework that we are using is that, you have to buy QSR companies when the same store growth is negative. And this is what we have seen, we had seen in a Jubilant FoodWorks. Obviously, there is an element of seasonality coming through. But if you look at a Barbecue Nation, that is a company that we really like. We believe that, it is a company which should do reasonably well. So this is one of the times wherein, you can do growth at a reasonable price, sort of buying using that framework in, consumer companies. And this is the reason why we are, very, very overweight on the entire consumer basket.
And perhaps your view has changed a bit, Aditya, over the last few months, because I remember at it was just a few months back, if I believe it right, that in one of your portfolios you had returned money to clients as well, multi-asset fund or something, wherein I remember reading about it that there was that worry about that the markets are a bit overheated right now, and that's why you thought it's better to return some money out there. But within the categories of that, mid cap, small cap, large cap, where do you see more value on the table right now? Because in your emerging business fund, for instance, of course, you're tilted a lot more towards small cap, but is that the way to go?
So, I think so last 3 to 6 months, we have been more constructive on large caps incrementally. And the reason is fairly simple. If I look at, PE multiple, the scope for PE multiple expansion to happen, we have, let's take an example of financials as a sector. We took a very, sort of a underweight stance on financials 9 months back. And our logic was very simple, that we'll possibly, have net interest margins were at an all-time high. NPAs were the best that I have ever seen in the banking sector, and you had deposit growth, obviously being very, very challenging. As a result of all of the above, we took an underweight stance, and now we are changing that stance, because essentially, if you look at from a valuation standpoint, potentially IT and financials are two sectors wherein valuations are much more reasonable. They have gone through a phase of consolidation. And this is what we have seen, increasingly in large caps, wherein, small caps did well. But we took the overweight stance on small caps in, March of 2023. So it has been an 18-month run. Possibly it is time to take some money off the table as far as small and mid caps are concerned. But incrementally, I think so. Valuation wise, large cap investing is not very challenging. I have returned capital in one of the closed-ended AIFs, and this is the second time, I've taken that call. One of the things that we have to be fairly sensitive about as money managers is that, how do we manage money in a down cycle to a flat market? And that is what determines success for us. Obviously, in a bull market, obviously, investor goals are met. So we just thought that, it is an opportune time to take some money off the table. And thankfully, if we are acting in interest of clients, I think so we'll be better off from a long-term standpoint. But one thing that I would also like to point out is that, this is one of the few markets in my career wherein we have not seen a correction globally in a bull market for like 18 months. We have seen Dow Jones hardly correcting, 2.5% correction. Indian markets have only gone through a 10% correction. So I think so a 10% correction in a bull market results into a 25-30% correction in stock prices, and that is what is precisely happening at this juncture.
Right.
So we are trying to position our clients in companies wherein we believe that they are on a decline.
So one of your funds, that is the Emerging Business Fund. Now in that, Neuland Labs is one of the top holdings, and recently the company had got a very big drug approval related to for the treatment of schizophrenia. How's the outlook looking like when it comes to Neuland Lab? Because that is not one stock. That stock is not something that we hear on a regular basis, right?
Sure. So, one of the things that we like about this company is the QA/QC track record that they have had. This is a 40-year-old company. They have never failed a US FDA inspection. Apart from this, it is one of the most credible plays in terms of, API sourcing based out of India. More importantly, they also do, the dossier filings for essentially the biotechs in the US. So this is a API stroke CDMO company. We do believe that this company will benefit a lot from the biosecurity bill, which has got passed in the US. And reasons are multiple. They have got credible partners to support them. The recent drug that they got approval for possibly is a Bristol Myers Squibb drug, essentially. And we believe that one of the innovators, the base of Neuland today is so small that even one innovator could change the face of the company. So extending that thesis, I think so the company has broadly, doubled in terms of free cash flow yield. It is a 30% EBITDA margin business, 20% net profit margin business. So if I look at the metrics from a value investing standpoint, I think so that this is a stock post-COVID, the stock is up 50x. The COVID low was, 250 rupees. The stock is trading at, closer to 12,000 rupees today. We think so. They are a very, very credible play. And we like the theme. We like the biosecurity bill theme, and we like to be in the API space wherein we believe Syngene, Divi's and Neuland, all of these three companies should benefit.
Okay, point taken. Neuron Labs has definitely seen quite a bit of re-rating post that specific drug approval. But thanks so much, Aditya, for making time and speaking with us today. So that's the latest coming in from InCred and what they are thinking about the market right now.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.